Okay, good evening, everyone. Friday, the 24th of January, it's 7 p.m. Let's start with our fourth video analysis of the year. It's been an important week, especially due to Trump's remarks at the Davos Forum, which helped the market reach key levels from a volumetric perspective, approximately the area of 6,136, where the old naked VPOCs were from the 18th of December. We will also comment on this aspect, but we don't want to say that the news are unimportant. Substantially, no one could have known what Trump would say when he made his speech saying that rates should be cut. Next week, there is the meeting on interest rates, and then there's important news on the data, and I can already imagine the kind of scenario we might expect. Also because, from a cyclical point of view, we are on a 16-day top, and we lack a low, a very, very high 16-day top, which means it opens up a long scenario on the quarter. Now we will look quickly at the cyclical rules, but before we start, I'd say let's quickly look at the updates on the cycle depth channel. I know we're not too behind, in the sense that the vast majority of the marketing work is being done by artificial intelligence. This choice to change the channel follows these new potentials available. I repeat, the structure of this channel is not a marketing channel on trading, but it is a trading channel. Therefore, everything that concerns marketing on the channel is very time-consuming for those like me who are active in the markets. So, I have to make choices and cut all the waste, and focus on the most important things. Everything you see, shorts, translations, is generated by artificial intelligence, which helps to intercept the key points of the live sessions and helps make cuts, correct things, so the whole workflow becomes more streamlined. Excuse my voice. It's not yet at its best, so there will be some coughing tonight for sure. So I was saying, everything you see is generated by artificial intelligence. I invite you to subscribe to this channel. I don't want to tell you to abandon the other one at this time. I don't know to give you clear information on what will happen to the Save Club. I was planning to do a webinar exactly on the 17th of February, because it is a holiday in the United States, to update you on the news and prepare you for what will happen starting from June, and then, almost certainly, in September. So you will say, but September is so far away. In reality, it is not that far away, because with the next 3 months, that will fly by because of the course which starts on the 6th of February, and that we should finish by mid-April. Then we have the in-depth webinars in May. I'll quickly show you the calendar. Therefore, from February, there will be big news regarding trading, constantly. It's a little bit like what you are experiencing now. The channel seems to be still, in quotes, seems that there is nothing more, but in reality, everything is done behind the scenes. Every day, at 2:30 p.m. live on the markets. And every Friday at 7 p.m. live to do the closing of the week. Therefore, everything you see on the channel is the work of artificial intelligence. And it will always be like this in the future, because I repeat, this is a trading channel and not a marketing channel on trading. So I can't do the marketing myself directly as I am trading. This is the channel I was talking about. If you want to subscribe here. You will see a bit of everything that will happen in 2025. Quickly, as I was saying, this is the calendar for the volume course. We start on the 6th of February. The course is already closed. Only those who have already done the course on the cyclical part can participate. The registration times here were very, very tight. I took a few weeks in January to structure the course well, because I know who participates in this course, and I knew how to structure this training in the best way. Therefore, I'll show you this only because it will then be a part that you will find either from June or from September, and all that will then be the live programming of the Academy. And I repeat, for those who want to follow the live broadcasts, activate the membership at €30 per month, because it will then be closed. And those who have it active, from February until June or until September, will have a big advantage to use in the new Academy that starts in September. This does not apply to those who will do the course starting from the 9th of February, because they will already be inside the Academy, as they will repeat the same topics in a much longer time. The main topics are these: volume profile, the 30-minute chart for the strategy derived from market profile, the analysis of the composite volume profile, the dynamic quantities of volume at 90 seconds or 30 minutes, the analysis of the book with all the metrics, therefore bid and ask, the volume delta and the cumulative volume delta, with absorptions and exhaustions. And then, in early April, this of the 17th is certainly anticipated, Wyckoff accumulation and Wyckoff distribution. Not the price schematics, because everyone knows these. But as I said today, let's go see what Wyckoff would have done if in his times he had had the book. What would he have hypothesized from his VSA? Volume spread analysis? Well, having said that, let's go quickly to the news of next week. Monday, nothing special. There are the houses at 10. We will do the live broadcast, so we will put this news on the calendar with an alert at 10:16 Italian time. A bit of attention on the first positions for Monday. Tuesday, important news. Consumer confidence and durable goods at 8:30 a.m. pre-market, while at 10 a.m., consumer confidence. This is the first real important news of the week. Then the interest rates of the United States on Wednesday. The main data point is the interest rate. Trump has already anticipated it. He said, rates must fall very, very quickly. Thursday, GDP for the United States. Friday, there is the data on expenditure, both core and non-core, so it will be a very important week. I can already imagine this scenario, and what I think is that since we are on a 16-day top, which we will look at now, the market needs to retrace. Even less than 2% is not a problem considering the upward strength of the market structure. My scenario is that Powell will leave rates unchanged, after which some data may crack a bit in the following days. The market will go down because it has to go to close the 16-day cycle, and this could do it before or after the day of the rates. Trump will thunder, and, as I said this morning, be careful that he will continue to put pressure on the market regarding his vision, so watch out for the downturns, because they should be opportunities to buy. Well, having said this, at least this is my idea, my forecast, then all the intraday analysis we will do at 2:30 p.m. And who follows the intraday analysis knows what are the patterns I expect and how I trade intraday compared to the long-term operations. So, let's start looking at the daily chart, simply repeating what I showed also today live. The absolute top has not been broken. Let me check for a moment. Here we are at 6,163.75, and today we did 6,162.25. Very quickly, I remind you how the custom futures is built. In my case, the rule I apply is the rule of those who do mechanical trading, that is, 5 days before the expiration of the futures, the new futures is hooked. So the Monday of the week of expiration, and the futures ES expires on Friday, the Monday before, I already hooked the new futures. So I have no break of the maximum. If you go to see on TradingView, you will see instead that the maximum has been broken because TradingView hooks this maximum, that is, the new futures, on Tuesday the 17th, and Monday the 16th of December was not on the new futures H25, but was still on the old futures Z24. So the prices of Monday were lower, and then it has the gap up. So this is the maximum and the break there has been. What is the right rule? What is the wrong rule? There isn't a right or wrong rule, because the custom futures is a set of futures attached to each other, with completely different contracts, so there could also be different operators. It is just a virtual construction. So, analysis on this chart. The doubt had been there for some time. That is, on this low of the day, if I'm not mistaken, the 13th of January, the annual angular trend line is too high, almost certain target on the semi-annual angular trend line. And then either we were coming down and it was breaking, going to make 5,750, which was a level of union low of this closing, or we were going up and we were going to take the horizontal level that is here above area 6070 and 6090, it was the last bulwark. Here at the top of the market, and this is a key signal on the daily, we commented on it live. Be careful. The shooting star invalidated with a long pattern also on the 30 minutes. A signal is forming of a semi-annual low, an angular semi-annual low, therefore maximum attention for those who from here below are trying to average the short. Be careful, because we are going to make a 16 top with a high close, a close in the first third of the 16 days. Be careful, it's a very high closing of the 16 days. It opens up to a quarterly long scenario, so pay maximum attention to those who have opened short positions, where you have them, on what instrument, if leveraged, if not leveraged, and so on, maximum attention. Because the market is strongly projected upward, today, it would have already broken the absolute highs. Chart H1 with quarterly cycles in red, monthly in cyan, and 16 days in magenta. These are all the patterns that have been triggered in sequence. Monthly, 2 patterns, and 1 quarterly. Here there was the doubt of the lingua di balia, which was then confirmed. We had a key level. We saw this live too. I remind you it was 5,950. During the live broadcast, so immediately after the news on the 15th, beware that the volumes that are coming in beyond 5,950 indicate that below here we are not going back. We are not going to recover this imbalance immediately. Beware that here it will hurt for those who are short. Then the market has confirmed this suspicion. We are going to the upside crossing of the monthly VWAP on the quarterly VWAP, and this is a key support point of the structure of the quarter, and be careful also of the semester. Now the VWAP quarterly is at 6,006, so the probabilities that the 16-day cycle will crash here below to go to close at this moment are very low. Then, calmly, we will see the specific volumetric levels in the volume profile, but at this moment, this is more a monthly level of retest. Therefore, a question of cyclical logic. Here we are naturally talking about probabilities and also backtests on the cycle pattern indicator. A signal of support is triggered when the VWAP month cuts upward the VWAP quarterly. It is a monthly support. Therefore, we are closing a 16-day cycle, which is 50% of a monthly. So, a restart of new 16. Let's see where it goes, what closure there will be, and on what support. We will see it based on the new configuration of the VWAPs. At this moment, I tell you, be careful, because the probabilities of closing the 16 days here below are very low. Also because, I repeat, the market from the highs to this level should fall by 2.70%, eating back 50%. It would weaken the structure too early. The real level of support you see here is area 6,000 and 86,090. That is where now passes the 50% of the quarterly cyclical channel. So it's centered moving average, half of the cyclical channel area 6,090. These details then we will see much better with the analysis of the volume profile over 4 days. Let's go on the 16-day cycle therefore. 16, 8, 4. 16 color magenta, 8 orange, and 4 yellow. The 16-day cyclical channel, as I also said during the live broadcasts, it seems very squeezed, but in reality, it is a cyclical channel built on the average volatility of the S&P 500. So this makes it clear that all that was supposed to happen in the descent phase is now probably exhausted. A support signal has been triggered on the 16 days because the VWAP 8 days cuts upward the VWAP 16 days. So this is a support area of the 16-day cycle. First level of support is 6,109. The second is 6,028. And I remind you that here, on the 20th, on this low, in area approximately, let me take the aim again. Area 6,000, where we commented on the need for a low for the closing of this 8 days. Here it is. I'm changing the color to green. This 8 days we expected it lower, with a low and then a restart. So the price further down to retest the 8-day VWAP, generate a good signal, and then start. But it didn't happen, with a breakout immediately upward, and then all the levels we had prepared on the 4-point chart. But we commented on this 8-day pattern in the 2 days preceding its formation. So the day of the break and the day before. Angular long signal on 8 days. Therefore, this is the first 8 days. The second 8 days, top at 16 days. Be careful. Already from today, I told you. Let's leave it alone, trading off. The long signal has not been triggered today, and nor has the short signal been triggered. Perhaps it would start now, but I don't know who of you does the operations in the final part of Friday's session, so I would say to be careful. A 16-day low is missing. The first level of support is 6,109. The ideal volumetric level is lower at 6,028. That is the recovery of this spike movement of the 20th. And if we want to say so, from the point of view of probability, as a projection of the bottom of the 16-day channel, we are at 6,000 and 86,070. This is a more logical level of expectation. Now we will see it much better in the comment of the 4-day cycle. Let's go on the sequences of the 4 days, although in the last days you do not follow them. In what sense I did not follow them? I have moved them several times. Also to make you understand how, based on the market trend, when a long signal is triggered here, and this is a sign of strength of the 4 days, because the green 2-day trend line cuts upward the yellow 4-day trend line, this is a sign of strength. And here, in the previous analysis, on this low, I expected a top and downward acceleration for the closing of the 8-day cycle. That is, the 2 days should have rotated even more down. Then the 4 days come down, make the crossing. So also the price should have held the resistances and look for the assault here below, area 6,010, 6,005. This did not happen. We did not have the low as we would have wanted to see it. Maybe I also sent you the photo on the chat, 6,045 first level of target for the shorts, and then 6,035 was the final one, where I would have liked to see an upward structure, which there has not been. And then the market has overturned upward. Therefore we have angular strength of the 4 days, plus break of the highs, pullback, and continuation. So restart of the new 4-day cycle. And today, in the cyclical sequence you see here, the daily swings, you see them both. From the indicator, then from the times, about 24 hours, you also see them here, swing daily and hours. So we have 1, 2, and 3 of day 1, 3, 4, and 5 of day 2. Question: are they 24 hours, or less, or more? It is what it is. What matters is understanding the philosophy and the idea of cyclical analysis. Therefore, what is at the base of cyclical analysis? So 1, 2, and 3, then 3, 4, and 5, and the 5, 6, and 7. As the top of the 16 days, I would have liked to see the holding of 0.4 and further acceleration. This was my expectation, but not for the short entry, but to start preparing myself for the structure 7, 8, and 9, which is the closing structure. Today, almost certainly, we close this sequence in this way, with 0.7 almost certainly in formation. You see both the daily swings and the hours. So there's the weekend. Then on Monday, 7, 8, and 9, with 0.8 that closes higher than 0.6. As the market is now configured, then maybe in hindsight, 0.8 will become 0.6. And so we will have a 6-7 very fast. It could also be this 6-7 fast, explosive until tonight, and then the 7, 8, and 9 we will see next week. I remind you, the 16-day cycle is closing. The long trading is off. Therefore, wait for the next bullish configuration on the 16-day cycle, which we will have when the 8-day trend line will cut upward the 16-day trend line. There is no such configuration yet. We would like to see it down, on the most logical levels left behind. The first is this, just below area 6100. This is the vision from the cyclical point of view, with some info on the volumes with the VWAP analysis. Here ends the specific video analysis for the cyclical part. You will see all this part tomorrow on the Cycle Depth YouTube channel. For the others, we continue the live broadcast and move on to the volumetric part. A greeting to all those who will see the recording on the YouTube channel.